All right, we are back with Gareth Soloway, Chief Market Strategist of In the Money Stocks. And Gareth, we're going to continue through the tradition of getting together every time a major move or event happen in the markets.
Yeah, oh yeah, glad to be back and plenty of action today.
Yeah, man. Yeah, man. It's 9.1 CPI. Were you surprised?
Um, it's tough to know. It's looking at the commodity prices and trying to gauge when they started to fall and then how long does it take to pass through to the consumer. So I guess I would say I'm not super surprised, but I do think that this is the top on CPI readings. And I do think that by next month, you're going to have this full month plus of oil falling, copper falling. I mean, all these other commodities just collapsing pretty dramatically. And that probably starts to show at least next month a slight downtick.
Yeah, and we're seeing lumber, building materials, even labor starting to taper off a little bit in some markets in the building industry because builders are pulling back and just not building. They're finishing what they have. So yeah, interesting times. I'm kind of with you. I expected a 9 handle. Kind of called it in another interview, a week ago. And then before that, just based on everybody, I mean, who do you not know that hasn't changed their behavior lately with prices like that?
Oh, I mean, that was my whole reasoning behind when people were saying, $150, $200 oil. I was like, what planet are you guys living on? I'm looking at people changing their driving habits dramatically. And then you throw into the mix the Fed hikes, which is going to slow the economy. And I'm trying to figure out where are these people? And we're talking about analysts. I mean, Goldman Sachs. I mean, these players that should have immense knowledge, they're calling for these ridiculous price targets on oil. And I just did not see it.
Well, they're talking their book, they're in there and pumping it up. And yeah, I mean, you were right on too. That day after we finished, that's the last time we talked. Oil dropped immediately after we finished that recording. And, I guess it's leveled off now. Some people think it'll get back up a little bit. Some people think we're looking at $60 a barrel again. We'll see.
Yeah. Yeah. And I think also to keep in mind, I think you can see the stock market reacting today. Like there were a lot of individual investors, and I saw it on my Twitter feed today, that when that print came out, they were kind of, oh my goodness, the end of the world. And you saw the markets initially get crushed. We saw a big gap down, but the market started to recognize exactly what we've just said, which is this is peak inflation. All right. This is as high as it's going to get, at least in the near term. Now, it doesn't mean, and I think you would agree, we're not going back to 2%. I mean, that's not happening for a long, long time, if ever. But it's the market wants that little bit of hope. And just to see that number down ticking, which if you look at any commodities out there, you should see that next month.
Yeah, I think the thinking out there is this is probably peak. And like you said, it could take a year to 18 months to get inflation back under control. Forget 2%. I don't think maybe 2 years to get back down there, but we might see 4 to 6% within 12 to 18 months potentially.
Yeah, that's what I'm in the camp that it's going to be kind of that 4 to 5% range it's going to come into. And then unfortunately, the metrics that the Fed is taking to control it will then probably cause a slowdown that might start to get out of control a little bit by the Fed. And then the question is, at a 4 to 5% handle on inflation, does the Fed start to say, okay, we need to start to loosen policy because unemployment is now 7 or 8 or 10%. And I think that's what investors have to watch. Not so much this year. I would expect that more to be an issue next year.
Yeah. So on that note, what are you looking at for the Fed? Do you think 75 or 100?
I'm in the camp of 75. I know, believe it or not, I even heard 150 basis points today, but I think that's ludicrous. I think even 100 is a little excessive considering the signals. I mean, the Fed has to be looking at it like we're looking at it. At least I really hope they do. Otherwise, you really start to wonder about the Federal Reserve, where they see the economy starting to slow. They see these commodities coming down, which are gauges of economic growth, as well as projections on forecasting economic growth. And they have to be saying, okay, let's stick with 75 basis points and then we can reevaluate. Because I think after this Fed meeting, there's not another one till September. So that would be my guess, is they kind of go back into that wait and see mode and then see where we are then.
Okay. I agree, but I'm going to take the other side of that and say, with this print, I think there's a good chance, and obviously it's being priced at about 30% right now, or the polls, from analysts are saying 30% chance of 100 basis points because they're not meeting again until September. They can go ahead and hit it at 100 now, not have to worry about an emergency meeting coming back to the table. Maybe then they can come back in September and cut, to 75 and kind of gauge it from there. What do you think about that?
I think 100 is not outlandish. I think the 30% chance of that is right on par. I would agree with that. My big question is like, when we come back in September, you just have, I think that meeting is kind of mid-ish September too. So how comfortable are they continuing to hike rates by 75 basis points or even 2 times before the midterm elections too? And, that could go to your thesis of 100 basis points saying that, listen, if we're not going to be able to do any more hikes or we have to take it easy going into the midterms, maybe you do hit it harder with this next meeting. So I think that's definitely a possibility.
I think so. I think they're going to hit it hard this next meeting. And then that way they can back off a little bit, moving into the midterms. The administration's already lost, the incumbents have already lost the midterms. They're just, people are way, right. They just have lost all faith in the Fed and, the administration right now. And I think what happens is it's the Fed and the politics of this situation. The worse it is now, the better, because it's already a lost deal anyways. But next election cycle going into 2024, that's when the Fed can come back in. Hey, we beat inflation, we rescued the markets, and pump everything up going into the next election cycle after this midterm. True. So I'm not saying that's what their decision is based on. I'm saying their decision right now is we got to fight inflation because this is bad for the administration. They've got the lowest poll numbers ever. Everybody's blaming Biden, blaming the Fed. Yeah, Fed's lost all credibility. They have to act to get some credibility back. And then they can back off later going into the midterms, like you said.
Yeah, no, I actually agree with that. I think that makes a lot of sense. I do think that at this stage, the midterms now is kind of a hopeless battle. And they're probably looking forward and saying, okay, well, we now have, 2 more years to go before the next election for the president. How do we get things in line? So we start, and again, they're going to have to get things in line well before that election, and probably a year before things will have to be really on point, and then they can go there. By the way, one other thing I wanted to mention is people aren't talking about it, but really watch the PPI number tomorrow. And the reason I mentioned the PPI number is because it's producer. So the way inflation works is the triggers first occur on the producer side. The producer then passes it to the consumer. So it could be possible that we could see a slight downtick in the PPI tomorrow, which would then filter through to the consumer next month. And it's just something interesting. I don't know if that will happen, but it is a possibility. And again, that's just something no one's talking about tomorrow in terms of that PPI number actually being pretty big because it is a kind of a forecaster for the CPI.
Yeah. So that'll be a good indicator. And then of course we have earnings coming out next week, and earnings are, backward looking, but the guidance, that'll be interesting in terms of what, everybody's seeing, for future guidance.
Yeah, and I think JP Morgan reports tomorrow. The bank stocks are later this week, the rest of them. And then I think next week we have Netflix. IBM usually reports that next week. And then after that, you get into the craziness of Apple and all. And that Apple is going to be fascinating, right? Because you're really talking supply chain. You're talking about demand for their products. There's so many things in that stock that we'll know about the economy and the consumer as a whole, not just domestically, but globally. We know they have a huge footprint in China as well.
Yeah. We know the Fed's going to telegraph their move. You think it'll be this week after earnings or after PPI, or you think they're going to wait till next week after earnings?
Oh boy, good question. My guess is, if I remember correctly, they choreographed the 75 basis point last time. I think it was about a week early. So the market could get used to it. So my guess, it would be kind of right on that same cycle. And then, by the way, last time they leaked it through the Wall Street Journal. Be interesting to see if we get something again through the Wall Street Journal, or do they choose a different player to kind of get that information?
Yeah. Fun to watch. But I have a feeling they're going, especially if it's 100, they're going to let us know well in advance of their meeting, so the markets can unwind into that. So
yeah, Jerome Powell, if you're watching, feel free to reach out to Greg or I and give us, we'd gladly be the ones to put it on our Twitter.
We'll let everybody know and,
That's right.
Help them get ready for that. And, leading into that. So as we know, in the past, when inflation peaks, a lot of times markets will bottom. So let's take a look at what you're looking at, and can we start looking for a bottom here?
Yeah, so I bought gold this morning right after that CPI number. I picked up more gold because I just love those flushes. Again, as soon as I started to think about, is this peak inflation? Then what? And again, it's very counterintuitive because people think, oh, peak inflation comes down, maybe gold doesn't do so well. But I was looking at the dollar, right? And the dollar has been screaming, and we can take a look at the DXY, and the DXY was right into major resistance here. So here's your DXY chart. And again, look at this beautiful reversal on the dollar today after initially popping up. But if you go to a larger time frame, let's go to the monthly. What you can see here is you have two trend lines that are converging right at the high on the dollar here. So big resistance on the dollar. And again, for me, at least, this was a signal that an overbought dollar with peak inflation. And again, we've known that with inflation, the dollar's actually strengthened. It likely starts to come back in here as the Fed may not have to tighten quite as much if we do see peak inflation. So everything that was kind of, the dollar has been crushing the stock market. We've seen it crush commodities. So I was looking out there across the board at so many different things, from tech stocks to gold to silver, all those types of things in terms of looking for some opportunities this morning.
Yeah, and it's interesting because it doesn't seem to have done as much damage in the markets as it normally would with the dollar surging like it has.
Yeah, I agree. I mean, the dollar's move is incredible. I mean, absolutely insane. I mean, even gold. I mean, gold recently has dumped out, but for the most part, if you look at where gold is from the start of the year, I think gold is down maybe 3% or so from the beginning of the year. The dollar has rallied, I think, about 15 to 18% since the start of the year. So for me, that's kind of an indicator that there's money flow going into a gold type position. And so again, gold hasn't been a great performer, granted, compared to the stock market, compared to crypto, it has been amazing. But still, you haven't seen it outperform to the upside in a major way. But I think, again, I'm still a big fan of gold down here. If the dollar really starts coming in, gold could really be up for a big move to the upside.
Yeah. So what are you looking at for, Bitcoin and how that is tracking right along with the NASDAQ? I mean, it's almost tick for tick here lately.
Tick for tick. And again, a lot of people were getting, so number one, we've been down into this 2017 high, right? I mean, we've been below it a little bit. We've been above it a little bit. As of yesterday, we were below. Now we're back above today. And here's that line right there. But I think people were not, most crypto investors, all they do is focus on crypto. And again, I think that's what my stock background has been very good for, kind of seeing the bigger macro picture. And you have to understand that if the dollar wasn't surging, I think crypto would be much higher than it is right now. And if the dollar is topping, and you can already see the reversal in crypto as the dollar's fallen today, I think crypto has upside. I'm still in the case here where my midterm outlook is still down, but my near-term outlook is to the upside. I think we take out the short-term highs of 22, and I think you're probably headed back to at least 25.5 here. And that's assuming the dollar really has topped and starts to come in over the next couple of weeks.
So let's talk about this. So, if the Fed does 75 basis points, the market's already been getting ready for that. Do you think we still have that next leg down ahead of the Fed meeting when they leak that? Or do you feel like we've leveled off here until we see recession settle in?
No, I think the markets already kind of have the game plan here. And I think that's the amazing thing that most investors have to understand is that, by the time that CPI came out this morning, the markets, the algorithms reacted and the small investors reacted. But smart money was just buying hand over fist because they were already saying, okay, that number's over. Now we're looking to next month, right? And I think the same thing with the Federal Reserve is the markets are already seeing the odds, right? So high percentage of 75, lower percentage of 100. The markets are already saying, okay, well, if they do 100, maybe that's good news because they're going to then go on hold maybe all the way till after the midterms. And then who knows, maybe the economy, maybe inflation is so much lower, then they don't feel like they have to continue to raise so aggressively. And so I think that's the way the market looks at it. And I think we could actually be up for a little bit of a summer rally now, even if the Fed hikes 75 basis points or 100 basis points.
Yeah, that'll be interesting. And, I guess maybe into the close today, we're doing this. We started this at 1:30 EST. So, we'll see what the market looks like into the close and, we'll have a good indication there. But, from the standpoint of Bitcoin specifically, I'm wondering if we could put in that, macro bottom here without any other black swans, any other major economic events, everything kind of, inflation kind of levels off, we get a mild recession, the Fed does its thing for a little bit and can start easing up. I wonder if Bitcoin can put that, macro cycle bottom in here for the next leg and not have to go through the whole 80%, 85% thing like it's done in the past, given the level of investor that's in the game now versus in the past. You've got a whole different level of capital in the markets now that wasn't there before.
True. True, you do, no doubt about it. It's definitely a possibility. I would still handicap it as the least likely scenario for me. Just like always, I'm always fully aware that anything can happen, right? I mean, we could go lower, we could go straight up, but ultimately, there's still too much junk in the system, and we've seen bankruptcies, we've seen Terra Luna kind of collapse, and all these other things. But I don't think, I mean, for me, I still look at how many cryptocurrencies are out there. That's still problematic to me. Like, how the heck can there still be over 10,000 or 15 or 20,000 cryptocurrencies? Where does the washout finally occur? And so it would be hard for me to imagine that we're really done here, especially because of this, right? So think about this. Previous cycles have always had the Fed helping by printing. This is the first cycle we don't. So the logic would dictate this would be the worst of all the cycles versus the best of all of them. Now, granted, you do have more adoption, so I think you have to factor that in. Maybe if regulation came out, I think that could be a possible major positive as well. But I'm still in the camp. I got to think that we're headed lower after we get some sort of uptick here.
Yeah, it's interesting. And, so let's separate Bitcoin and crypto. So yeah, crypto, I mean, there's a lot of stuff that's got to get washed out, go away, just, but Bitcoin is not as liquid, of a market. And you've got, Sam Bankman in there, you've got Binance in there, you've got the big miners that haven't had to sell yet, that are holding on. You've got other big investors like, Michael Saylor, Elon, Jack Dorsey. They're not a huge part of the market, but they've got a substantial amount. They don't have to sell. And you've got Tether, that's keeping things popped up a little bit, and, other entities like that. So that's I'm wondering if there's enough liquidity between those types of investors that don't have to sell and won't capitulate no matter what the price does, that it can keep it at this level.
What do you think about the chance? So let's say the price gets driven down to 12,000 or 10,000 on Bitcoin, which I don't know where Michael Saylor's margin calls come in. I know he has leveraged out a little bit, but that would be the other thing that would be really scary. Like if we started to break, let's say the 17.5 low, where is his point where MicroStrategy has some issues there? I don't know. I don't remember. Initially I heard it was around 21,000, and then I think he kind of updated it and said it was lower than that. But that would just be something else to kind of keep in mind, is that when you have an illiquid asset like Bitcoin, if any of these, I mean, did you hear about Mt. Gox, right? So apparently they have 150,000 Bitcoin that might get unloaded. Now, market doesn't care about that right now, but if we were to get another leg down, do these margin calls, bankruptcies, all these factors start to kind of trickle through? So I could almost be on your page where maybe this is a bottom if we don't go at all any lower. That would trigger more bankruptcies, which would be more liquidations and those. But if we do take out 17.5, that's where I would get real nervous, minimum going down to 12,000, maybe even sub 10.
So here's the soundbite. If we don't break this level, the market's not going any lower.
I love it.
Now, so
I think we can agree on that. That sounds right.
If we don't break this level, it's not going any lower. No. So I think with Michael Saylor, I think, they have a level that they have to provide more Bitcoin as collateral to, that one loan. I think it's like a $40 million loan. Mm-hmm. So that's not a huge deal. His other loans that he took out were, corporate bonds. And I'm not sure what the covenants look like in there. And if there's some sort of a pledge or liquidation event in that, and those, which he says there's not. He says those are, corporate guarantees, and it's all based on the company, and, they have 5-year notes on them or whatever.
Yeah. I'd be curious to just see, like, if Bitcoin ever did get down sub 10, do people really start going after him in terms of his, questioning his ability to lead? Granted, I think he's the biggest shareholder by far of MicroStrategy. But yeah, I mean, it does warrant, there's just so many kind of unknowns because whales own so much of Bitcoin that it does. Yeah, it just makes you wonder what the heck could happen.
Yeah. So that's just a thought. And, for people, because everybody's, do I buy now and all that? Hey, look, if you're going to buy at this level, you got to be willing to accept what's the downside. What we've seen in the past, 3,000-4,000 might stay down at those levels for a year. It should, no matter what happens, it should get back to at least this level. Will it go higher? We don't know. Nobody knows for sure. There's no guarantees. It could, it should, but will it? We don't know, but we pretty much can feel good it'll get back to this level. The question is, how far down will it go? How long will it stay there? And if you're going to buy at this level, you got to be willing and able to, go through that and weather, that
Yes.
environment.
And that's what I've done. So when we were at 19 a couple of weeks ago, I did pick up a little bit of a kind of a longer term hold, but it was only 1/6 of what I planned to accumulate. So basically kind of dipping the toe in the water and saying, okay, this is what I'm willing to allocate of my net worth. Then if we go lower, I can kind of average dollar cost average in, knowing that my long-term view is super, super bullish on Bitcoin.
Yeah. Yeah. And, for me, I kind of feel like it's doing the same thing it's been doing. That, I think with the Fed move, especially 100 basis points, we got another level down, 14 and a half, 15, 16, somewhere in there, to kind of do a little bit more shaking out, see who they can liquidate, who's going to give up. And then we'll see where it goes from there. But, so far today, this is a good sign.
Yeah, this is. I mean, if the dollar tops, you at least got to get a near-term rally. Again, the question is later on. My biggest fear, I think, is that if the economy slips into recession, right, and you have a scenario where risk assets take another hit because of that. So let's say earnings start to really suffer, maybe people start to fret about it's going to be worse than a recession, but maybe like a Great Depression or even a Great Recession like we had in 08, 09. Does that deleveraging then even take Bitcoin down with it like it has now over the past, year?
And that's what I'm waiting to see. I want to see earnings and I want to see the Fed's response to everything before, I start making some moves. Yeah. So, I've been in and out on some of these little ranges, and I'm not usually a day trader, like you. I'm more longer term, bigger macro moves typically in the markets, the 2009, 2018, 2020, those events. But here lately with this volatility, it's been fun kind of getting in and out and playing some of these ranges. But that's kind of what I'm waiting for before I make any more significant moves, because I don't know what it's going to do. Nobody knows. It could shoot to the, it could double from here in the next couple of weeks for all we know, and it could drop down to $5,000. We just don't know.
No, we don't. And I think that's part of the great thing about investing, right? You have people on both sides, and that's what makes a market. So all we can do is make the best judgment, and the kind of the chart. I use the charts myself, and it seems to give me a nice little edge, and that's all we can do.
Yeah, and to me, it's doing exactly what it's done the last 3 cycles of the CPI and the Fed response. So that's why I feel like, for me, what I think, is that we'll probably get one more level down. And that's going to be the big test to see. And I think that's where a macro bottom could be put in, is the next level down, 12.5 to 16, somewhere in that range. But I think we're going to break that last low we just put in, at least test it.
Yeah, no, I agree with you on that front. Absolutely. Take a look at the NASDAQ here. Great recovery on the NASDAQ today, man. I tell you, there was this upsloping trend line. We opened below it, but they rescued it. And right now, we're only up 70 cents on the Qs, but considering that print on CPI, that's a nice recovery for sure. So the tech stocks are showing some signs of life. I think the dollar weakening, if that continues, is a positive for the overall market. And I think, really just keep an eye. I'll tell you one thing. There's one chart I've been watching more than anything, more than Bitcoin, more than S&P, more than the NASDAQ. And it's this chart right here. This is really the key chart, the dollar.
Yeah. And look at so if it breaks this level, look where it's headed next.
Yeah, short term, you'll have support here and here, but really this is your next big area right in here.
I'm talking to the upside. Zoom out a little bit.
Oh, to the upside. That's a whole different story. Oh boy.
Right. So look at the last time. If it breaks out from here, look at the last level it's taken out.
Yeah.
2000.
Yep.
And that, so there's a lot of thinking. Jeremy Grantham, he thinks we're repeating the 2000, bubble in all assets, not just NASDAQ, .com bubble.
I could see that. I agree with that. I think crypto is a case in point. There are so many freaky similarities with the crypto bubble and the .coms that it's you can't even deny it. And it makes a lot of sense. Think about how much insanity was in the .com era, and then look at what's happened with the Wall Street bets and the GameStops and the AMCs and Robinhoods and crypto. It is so similar.
So that's what I'm looking at. If the dollar breaks out up, and takes out this next level here that it's rejecting right now, I think you're headed back to that 2000 peak. And then, man, look out if it gets there.
Oh my gosh. If this, I couldn't even imagine. And the scary thing is, if that ends up happening, what does Bitcoin end up going to at that point? Because you'd have to assume it would go down further for sure.
You would think, but it's held up pretty good so far. But like I said, I think there's a lot of players that don't have to sell this time versus last time around. There aren't as many liquidations for the big holders, and Who knows? They could just be waiting, for a little bit more upside and let it go. We'll see. Or there could be somebody after that's going to go after Michael Saylor and try to take him out. So we'll just have to see what happens. Maybe Soros is in there somewhere, kind of lurking.
Who knows? Who knows? I'm sure there's plenty of big money out there that's lurking. I mean, I'm not the only one. You're not the only one that's paying attention to Bitcoin here, and people with a lot bigger, a lot more money, I'm sure are.
Yeah. But I feel like from this standpoint, all markets, traditional markets, everything. I mean, even if you had another 10, 20% downside from here, without some sort of a World War III event or major banking crisis or credit crisis like we've seen in the past, I don't feel like we're going to see much more downside from here, maybe another 10, 20% max.
Are you talking to equity markets or Bitcoin or all?
Pretty much everything. Yeah.
Yeah. I mean, in the very least, I think just poetically, we have to go back and test the pre-COVID high here, so I think to me, that's the no-brainer level. Whether or not we get below that is probably all about how, do we go into a recession or not? And then how bad is it? But I think, just think about this. I mean, think about all the money that was pumped into the system that got us this move and how vertical it was compared to the long-term trend. And then it just makes a whole lot of sense with the Fed, pulling all that out, that at least we would go back to this point right here.
Yeah, and even that was pumped, so
yeah, I know
that. Yeah, I'm with you there, and that's only about another probably 10% down from where we're at in traditional markets there, and then that would translate into a 20-30% move in Bitcoin, putting it down to that 12 to 15 range.
Yeah, exactly. I like it, Greg. I think the one thing we know for sure is that volatility is going to continue, and we're going to have a lot to discuss.
Yeah, man, big moves, big days, that's for sure.
Yeah.
Awesome. Well, Gareth, it was great chatting, man. Thanks for joining me again today, and have fun. You getting ready to take a little vacation?
No, working vacation, headed to Canada for working vacation.
Awesome. Well, we will see you on the next video.
I look forward to it. Take care.
All right, man.